Which of the following best reflects the core purpose of insurance in modern economies like New Zealand? A. To guarantee profit to individuals from unexpected losses. B. To allow individuals to avoid their financial obligations during disasters. C. To provide a mechanism for transferring and pooling risk across a wider community. D. To enable policyholders to receive compensation without regard to policy terms. The correct answer is C, to provide a mechanism for transferring and pooling risk across a wider community. Explanation. Insurance allows individuals and entities to transfer risk to an insurer who pools premiums across many policyholders using the law of large numbers to predict aggregate losses. It does not eliminate risk, but manages it efficiently. In New Zealand, this underpins household, business, and natural disaster insurance, e.g., IREC, Earthquake Commission. In a general insurance market, what is the main regulatory function of the Reserve Bank of New Zealand RBNZ? A. Handling consumer complaints against insurers. B. Issuing licenses to insurance intermediaries. C. Regulating insurers for prudential soundness and solvency. D. Setting standard premiums across all insurance products. The correct answer is C, regulating insurers for prudential soundness and solvency. Explanation. The INTROGINZ ensures insurers maintain financial strength and solvency through licensing, solvency standards, and supervision under the Insurance Prudential Supervision Act 2010. It is not responsible for conduct, regulation, or pricing, which falls under FMA or INTROGINZ. What is the primary responsibility of the Financial Markets Authority, FMA, in relation to insurance intermediaries? A. Regulating the solvency of general insurers. B. Supervising the ethical conduct of financial advice providers. C. Setting premiums for regulated products. D. Issuing reinsurance licenses to international reinsurers. The correct answer is B. Supervising the ethical conduct of financial advice providers. Explanation. The FMA regulates conduct in New Zealand's financial sector, including financial advisors and insurance brokers, ensuring compliance with the Financial Markets Conduct Act 2013, overseeing disclosure obligations, conflicts of interest, and fair dealing. Solvency and licensing of insurers are handled by the RBA. Which of the following best describes the role of an insurance broker in New Zealand's insurance industry? A. An agent employed by an insurer to sell products directly. B. Government regulator enforcing insurance policy. Wording. C. An independent party acting on behalf of the insured to obtain the most suitable coverage. D. Reinsurer that provides advice to direct insurers. The correct answer is C. An independent party acting on behalf of the insured to obtain the most suitable coverage. Explanation. A broker is engaged by the client, not the insurer, provides advice, access to multiple insurers, and helps with claim support. Must be registered on the Financial Service Providers Register (FPR), must comply with FMA conduct obligations. Which of the following scenarios would most likely be covered by a professional indemnity (PI) policy? A. A lawyer's office is damaged by fire. B. Consultant gives incorrect financial advice that causes client financial loss. C. Building owner is sued for slip and fall incident on their premises. D. Cyber attack encrypts company's data and demands ransom. The correct answer is B. A consultant gives incorrect financial advice that causes a client financial loss. Explanation. Professional indemnity insurance covers as omissions or negligence in professional services, financial losses to third parties caused by bad advice or misconduct. Fire damage equals property cover. Slip and fall equals public liability. Cyber attack equals cyber insurance. Which of the following best reflects the application of the indemnity principle in general insurance? A. The insurer reimburses the insured only up to the value of the actual loss. B. The insured receives compensation equal to the sum insured regardless of the actual loss. C. The insured is entitled to a profit on any claim filed. D. The insured is restored to the financial position they held immediately before the loss occurred. The correct answer is D. The insured is restored to the financial position they held immediately before the loss occurred. Explanation. The principle of indemnity ensures insurance compensates for actual loss only, not to generate profit. This maintains fairness and discourages moral hazard. Option A is partially true but lacks clarity. Option D is more accurate and complete. Scenario. Ngoti Tainlid operates fleet of delivery vans. They purchase fleet motor insurance policy. The insurer justifies the premium by noting that it's based on the experience of hundreds of similar fleets. What concept is the insurer relying on when setting this premium? A. Indemnity theory. B. Risk avoidance. C. Risk pooling and the law of large numbers. D. Subrogation and contribution. The correct answer is C. Risk pooling and the law of large numbers explanation. The insurer applies the principle that grouping similar risks improves predictability of losses, allowing them to set sustainable premiums, pool premiums to cover future claims, maintain actuarial balance. This concept is at the heart of all general insurance pricing. Which of the following would be most appropriately covered under a cyber insurance policy? A. Costs associated with notifying customers of a data breach and restoring compromised systems. B. Repair costs for physical servers damaged during a natural disaster. C. Loss of rental income from a tenant during building repairs. D. Legal expenses arising from privacy regulation violations following a ransomware attack. The correct answer is A. Costs associated with notifying customers of a data breach and restoring compromised systems. Explanation. Cyber insurance policies cover data breach notification costs, system restoration, legal expenses. Option D also correct but not chosen here due to instruction. Option A is clearly within cyber policy terms. Physical damage to hardware. Scenario. Jordan's property is damaged by a careless neighbor. Jordan's insurer pays out the claim and then pursues the neighbor for recovery. What principle of insurance is being exercised? A. Subrogation. B. Contribution. C. Proximate cause. D. Utmost good faith. The correct answer is A. Subrogation explanation. Under subrogation, an insurer that pays a claim can step into the shoes of the insured to recover losses from the responsible third party. Option D is unrelated. Utmost good faith applies during policy inception, not post-claim. What is the main purpose of the Financial Service Providers Register (FPR) in New Zealand? A. It provides legal immunity to insurance advisors. B. It allows customers to file legal suits against insurers. C. It publicly lists licensed financial service providers for transparency and oversight. D. It sets underwriting rules for all financial products. The correct answer is C. It publicly lists licensed financial service providers for transparency and oversight. Explanation. The FPR, a public register administered by the Companies Office, lists licensed financial service providers, including insurance brokers and advisors, enhances transparency, consumer protection, and accountability. It is not a rulemaking or enforcement body. Which of the following situations would most likely be excluded under a standard travel insurance policy unless extended cover is purchased? A. Injury sustained while participating in a professional mountain biking competition. B. Emergency surgery required due to food poisoning overseas. C. Flight delays caused by airline mechanical issues. D. Theft of checked baggage during a transit stop. The correct answer is A. Injury sustained while participating in a professional mountain biking competition. Explanation. Most standard travel policies exclude professional sports unless special cover is added. Medical emergencies, B. Flight delays, C. and theft, D. are typically included unless subject to specific policy limits. When is the principle of contribution most likely to apply in a general insurance scenario? A. Two policies cover the same insured item for the same peril. B. The policy has a reinstatement clause. C. The insured sues a third party for damages. D. One insurer settles the entire claim and seeks proportional recovery from another insurer. The correct answer is D. One insurer settles the entire claim and seeks proportional recovery from another insurer. Explanation. Contribution applies when multiple insurers cover the same risk. The insured cannot recover more than the actual loss, and one insurer pays and seeks a portion reimbursement from others. Scenario. Anna owns a cafe. Customer trips over loose carpet and breaks their wrist. The customer sues Anna for negligence. Which policy is most relevant to this situation? A. Public liability insurance. B. Business interruption insurance. C. Employer's liability insurance. D. Professional indemnity insurance. The correct answer is A. Public liability insurance. Explanation. Public liability protects against third-party claims for bodily injury or property damage caused by the insured's premises or activities. Employer's liability covers employee-related incidents, not customer injury. Which of the following most accurately represents the concept of Consideration in an insurance contract. A. The promise by the insurer to pay claims if conditions are met. B. The mutual exchange of proposal and acceptance. C. The premium paid by the insured and the insurer's promise to indemnify. D. The existence of an insurable interest at the time of proposal. The correct answer is C. The premium paid by the insured and the insurer's promise to indemnify. Explanation. In insurance contracts, consideration refers to the premium paid by the insured, the promise of protection indemnity by the insurer. Options A and B describe other contractual elements, while D refers to a legal requirement, not consideration. Which of the following best explains the principle of proximate cause in insurance law? A. The dominant and most effective cause of the loss must be covered under the policy. B. The first event in a chain must always be covered to trigger the claim. C. All events contributing to a loss must be named in the policy. D. The most immediate physical trigger of the loss determines coverage. The correct answer is A. The dominant and most effective cause of the loss must be covered under the policy. Explanation. The proximate cause is not necessarily the last or first event, but the one that directly and efficiently caused the loss. Courts will examine causation to determine if policy coverage is triggered. Which of the following is a disadvantage of manual rating compared to experience rating? A. It adjusts for actual claims experience. B. It is prone to manipulation by underwriters. C. It may not reflect the individual risk characteristics of the insured. D. It is only used in emerging insurance products. The correct answer is C. It may not reflect the individual risk characteristics of the insured. Explanation. Manual rating uses standard rate tables based on class averages, which don't always consider specific individual risk factors, are easier to apply, but less tailored than experience rating. Scenario. Kiri completes a proposal form for commercial property insurance but fails to disclose that the building is partly unoccupied for 9 months of the year. A fire occurs during the unoccupied period, causing major damage. How can the insurer respond? A. Deny the claim and cancel the policy due to lack of insurable interest. B. Pay the claim in full since the premium was paid. C. Deny or reduce the claim due to non-disclosure of a material fact. D. Enforce subrogation rights and recover losses from the broker. What is the main purpose of an endorsement in an insurance contract? A. To restate the general exclusions listed in the PDSB. To formalize changes or additions to the policy terms. C. To provide a method for cancellation. D. To calculate the total insured sum. Scenario. Amelia owns a luxury art gallery in Wellington. She wants insurance coverage for potential decline in market value of her artwork over the next year due to economic downturn. Which of the following best explains whether this risk is insurable? A. Yes, because market value risks are common in property insurance. B. Yes, if the insurer charges an appropriate premium. C. No, because it is a non-physical, speculative, and unquantifiable risk. D. No, because the gallery is. The business and business risks are excluded. The correct answer is C. No, because it is a non-physical, speculative, and unquantifiable risk. Explanation. Insurable risks must be fortuitous, measurable, definable, and not speculative. The decline in market value is economic speculation, not a direct physical loss. Insurers do not cover business investment risks, only fortuitous accidental events like fire or theft. Which of the following losses would most likely be covered by a business interruption insurance policy? A. Loss of income due to factory closure following insured fire damage. B. Cost of rebuilding the factory after a fire. C. Legal liability for a faulty product. D. Reduction in revenue due to a competitor entering the market. The correct answer is A. Loss of income due to factory closure following insured fire damage. Explanation. Business interruption insurance covers loss of gross profit income, fixed costs, additional expenses due to temporary closure from insured events. It does not cover competitive or market-based losses. What is the main purpose of an endorsement in an insurance contract? A. To restate the general exclusions listed in the PDSB. To formalize changes or additions to the policy terms. C. To provide a method for cancellation. D. To calculate the total insured sum. The correct answer is B. To formalize changes or additions to the policy terms. Explanation. An endorsement legally modifies coverage, can restrict or amend terms, becomes part of the contract once agreed. Which of the following is a primary role of the Insurance Council of New Zealand? INTROGINZ? A. Issuing regulatory licenses to insurers and brokers. B. Auditing financial statements of insurers. C. Representing and advocating for the general insurance industry. D. Determining legal penalties for insurance fraud. The correct answer is C. Representing and advocating for the general insurance industry. Explanation. INTROGINZ is the industry body representing most of New Zealand's general insurers. Its roles include promoting good practice, e.g. through the Fair Insurance Code, policy advocacy, public education, supporting industry resilience. It does not perform regulatory, licensing, or enforcement roles. Which of the following best illustrates a physical hazard from an underwriting perspective? A. The insured has a prior history of fraudulent claims. B. The building has an outdated electrical system and lacks fire sprinklers. C. The insured has no prior insurance. D. The policy includes a broad accidental damage clause. The correct answer is B. The building has an outdated electrical system and lacks fire sprinklers. Explanation. Physical hazards are tangible characteristics that increase risk. Poor wiring, lack of security, building materials. Option A is a moral hazard, not physical. Why is the law of large numbers important in the context of general insurance? A. It reduces the need for underwriting or risk selection. B. It allows insurers to predict individual policyholder losses with certainty. C. It enables insurers to predict overall claims costs more reliably across a large group. D. It guarantees that all insured individuals will receive payouts. The correct answer is C. It enables insurers to predict overall claims costs more reliably across a large group. Explanation. The law of large numbers states that as the number of exposure units increases, actual loss results tend to converge to expected outcomes. This allows accurate pricing, risk pooling, financial sustainability for insurers. Scenario. Jacob files a claim for storm damage. His insurer delays the claim decision for over 60 days without explanation. Jacob refers to the Fair Insurance Code for guidance. Which of the following best reflects the obligations of the insurer under the Fair Insurance Code? A. The insurer has up to 6 months to assess complex claims. B. The insurer must make a claim decision or provide updates within a defined time frame. C. The insurer is entitled to delay any claim as long as they request more information. D. The code only applies if Jacob has a legal advisor. The correct answer is B. The insurer must make a claim decision or provide updates within a defined timeframe. Explanation. Under the Fair Insurance Code 2020 revision, insurers must acknowledge claims promptly, decide claims within 10 working days after receiving all info, or provide updates every 20 working days if further information is needed. The code promotes transparency, timeliness, and fairness in insurer conduct. Scenario. Liam owns a logistics firm and takes out goods in transit insurance with a warranty. The vehicles must be fitted with GPS tracking. A truck without GPS is stolen and the claim is denied. Why is the claim likely denied? A. Because it is a claim outside the policy period. B. Because the loss was due to war or terrorism. C. Because there was a breach of warranty, a condition precedent to cover. D. Because the insurer has no proof the vehicle existed. The correct answer is C. Because there was a breach of warranty, a condition precedent to cover. Explanation. Warranties are strict conditions in insurance. If breached, insurers may deny claims even if unrelated to the loss, unless law states otherwise. Scenario. A new type of drone insurance is launched with no historical claims data. An underwriter uses their expertise to price each case individually. What type of rating is being used? A. Experience rating. B. Manual rating. C. Statistical rating. D. Judgment rating. The correct answer is D. Judgment rating. Explanation. Judgment rating is used for new, specialized, or low-frequency risks, relies on underwriter discretion, not data. Which of the following best describes the insurer's right to cancel general insurance policy under standard New Zealand terms? They. Only with insured's written consent and 90 days notice. B. Only after 3 consecutive missed payments. C. Unilaterally with reasonable notice and valid reason under policy or law. D. Never. Once issued, policy must run until expiry unless fraud is proven. The correct answer is C. Unilaterally with reasonable notice and valid reason under policy or law. Explanation. Insurers can cancel if notice is given as required by policy consumer law. There's valid cause. E. G. Non-payment, non-disclosure. Option D. Overstates the restriction. Insurers do have cancellation rights. Which of the following is a common exclusion in standard home insurance policies in New Zealand? A. Gradual damage due to wear and tear. B. Losses from fire or burglary. C. Damage from electrical power surges. D. Accidental damage caused by visitors. The correct answer is A. Gradual damage due to wear and tear. Explanation. Most standard home insurance policies exclude gradual damage such as rust, mold, deterioration over time, fire, theft. Accidental damage are usually included unless explicitly excluded or capped. Why do insurers commonly purchase reinsurance? A. To remove administrative responsibility for claims. B. To guarantee profits regardless of market losses. C. To spread risk and limit their own financial exposure. D. To increase competition with direct insurers. The correct answer is C. To spread risk and limit their own financial exposure. Explanation. Reinsurance allows insurers to reduce concentration risk, take on more business, safely meet capital and solvency standards. Options A, B, and D misunderstand reinsurance's risk management role. Scenario. Leo applies for home insurance and fails to disclose that his house has a history of flooding. A claim arises a month later due to another flood event. What could the insurer potentially do in this situation? A. Deny the claim due to material non-disclosure and void the policy ab initio. B. Pay the claim and apply future premium loading. C. Accept the claim and issue a warning. D. Enforce the full policy but limit payout to 50%. The correct answer is A. Deny the claim due to material non-disclosure and void the policy ab initio. Explanation. Under utmost good faith, the duty of disclosure requires applicants to provide all material facts. Failure to disclose a known high-risk issue like flooding gives insurers the right to void the contract and deny claims.